Hi guys, welcome to another video by Optionables. My name is Ayush and I'm a trader. In this video, we'll analyze Nifty and Bank Nifty and we'll look at how we can trade the coming week options. So now we'll go to screen recording and look at the level one by one. Hi guys, welcome to the screen recording. So as we start with Nifty, Nifty has made an all-time high and that is like very strongly on after the GDP data which came for India. So generally it has been said that we should never trade based on a news because generally what happens is it will be buy on rumor and sell on news, but sometimes there are events. For example, in December starting there was one event which was like state election. Because of that we saw a gap of about 2% on Nifty, and Bank Nifty also opened about 3% gap up. Such events are very highly regarded because generally they change the direction of the market and they generally change the structure of the market. Generally what happens is whenever there is all-time high taken out in Nifty or any index or any stock itself, you will see that there will be aggressive buyers and there won't be sellers. But what we saw something here is like, if you see after this all-time high, there were 5-6 days where Nifty was not ready to go up or down, and then there was a shakeout, which means that weak hands were thrown out just before the data release, and due to that it came good because last year it was 4.6 and this year it came above 8%, which is like very good, and market reacted the same way. There was surprisingly no gap up because of, I don't know why, but suddenly if you see on that particular day, and if we zoom out the candle, the market opened nearly a bit bullish, and from that Nifty went 1.6% up and Bank Nifty went 2.4% up. So until and unless this candle's low is broken, there is no need to go bearish on Nifty. And one thing is which is very clear is that the market in the intraday is trading with high swings. For example, anybody trading options will realize that the volatility which the premiums are pricing in is way higher than what they are being offered. For example, you will see on a particular 0DT any index options will price in, let's say, 0.5% at the money straddle, but the market itself will move 0.5% in next 15 minutes. That shows that the volatility is not rightly priced in the premiums. And secondly, if you are somebody who trades with naked option selling, you need to assess your exit point, because recently in the last week or last week in mid cap, an option trading at 20 rupees directly shoot up to 350, and that was happening in 3 minutes time. So if you're lucky, your stop loss order would have got a fill. But let's say if you don't get a fill and you're over leveraged, that one day is enough to make you lose more than 20-25% of your capital. So how can that be avoided? Firstly, the reason is that there should be hedging for every option you do. So let's say that you are doing a straddle or strangle, you hedge them with far OTM and properly hedge them like 0.5% away or 1% away, depending on how much quantity you are trading. And if you are not hedging it and you are like, okay, I'm ready to get the fill or whatever happens, so there should be adequate gap between a stop loss limit and stop loss price. For example, if your stop loss is at 20, there should be 3-4 rupees gap minimum, because if there is not sufficient gap and when the market shoots up, even 5-6 point gap between the stop loss limit and stop loss price won't get filled, and that is very scary. So now coming back to the analysis, the reason I'm very much bullish on Nifty now is the structure. If you see in the range, the market was making higher high and higher low. Like whenever there was a big red candle, there was no follow through. For example, if you see here also, this candle took away the range of 5-6 days, but there was no follow through. This candle also no follow through, and generally it happens in the bull market on when the structure is very strong. So what we can see in the coming days is some sort of like one way rally, or if the rally doesn't come, we may consolidate here for a bit and again will trend up. So when will this bias of bullishness go away? Once we close below 22,000 or 2250. So secondly, whenever the market trends in an uncharted territory, that is all time high, for example, any buyer who would have bought at any price below this would be in profit. So generally they won't be in a hurry to book profits. Like for example, let's say somebody bought here also, he would be in profit because the market is trading at the all time high. And secondly, people generally fear when they start getting M2M losses. But in trend following, what works is you have to keep your stop loss or your losses small, and you have to keep getting your profit run, so that whenever you get, your accuracy is not going to be higher than 3-4 out of 10 trades, but your risk to reward should be higher. So that was our analysis for Nifty. Now we'll go to Bank Nifty. So coming back to Bank Nifty also in this broader range of 47,400 on the upside and 44,700 on the downside. You can see that irrespective of what happened with the gap downs and broader big red candles, there was no follow through coming. Like for example, Here also the market again trended up, and this shows that there's some sort of accumulation going on, and that will be tested once 47,400 is broken on the upside. So you can see that irrespective of this breakout, the market gave a shakeout and again came, and generally people who would be bullish on bank nifty with this candle's low would have been thrown away here. So this is what happens when like there's too much volatility. And secondly, if you see the same GDP data effect on bank nifty also is like 2.53%. So until and unless we are going below 46,170 or 46,100, we should not be aggressively bearish. The reason being that there is no follow through, and secondly, bank nifty has been relatively weaker than nifty for a quite long time. So this consolidation and then a breakout will be very bullish for bank nifty as well. So that was our analysis for nifty and bank nifty. If you like this video, like, share and subscribe to the channel. Thank you.